Good morning, ladies and gentlemen. The time is 10:46. Today is the 16th of March. Today is a Wednesday, and it is one of those rare Wednesdays where I'm not in a trade and I do not plan to take a trade. I'll go over why, and I'll go over exactly why the shop is shut for business at this point of time. Firstly, I was carrying one trade that I covered yesterday, this double diagonal trade. And look, so here, what is the threat to the trade? Yesterday itself, I mentioned that there was a good intraday spike of volatility. India VIX was up intraday a good 6% or so. So if that falls off, then that is one of the threats because these monthly hedges will lose, right? But the idea to carry was because the weekly options which are going to expire on Thursday, they still had what I considered a considerably good amount of value. So the theta in this would balance whatever Vega damage is done to this particular thing. To put it simply, this triangle which is expiring in 2 days had a lot of value. So that in case these lose, then this will protect me first. And even if there is a move in some direction, my idea was 100 points plus minus. This would be in 4+ lakhs profit by morning. That was the idea. But we had a more than 200 point gap. And despite there being a 200 point gap with a 6% crush in volatility, this position I exited at the same mark to market. So 3.2 lakhs is what it was showing. After weighted average, it was around 3 lakhs. Yeah, in the morning, I exited the same position for 3.2 lakhs of profit. So this will now show days history that I've exited this position, and whole day it will remind me that if you held the position, you would be making this much more. This day's history doesn't mean anything. It's just exited the positions. Apart from that, I took an intraday triangle, which I exited at a cost at break even, and I'll go over why I exited at break even. See, first of all, huge crush in volatility. It didn't matter even if you had 16,600 short straddle yesterday at close. Today morning you were in profit, and even though we're opening at 16,900, 300 points above, you will still be in profit simply because that is how much put options have lost. Every put option lost money, lost a crazy amount of money. Call options have not gained anything. Proportionately, there has been no huge IV crush on the put side. Calls have not gained at all in IV. It's just that because there's been up move, some increase because of whatever delta is there, but no call side IV increase at all. So premiums are dirt cheap at the open. But despite that, I took entry simply because today is a Wednesday. Look, being a Wednesday, these options expiring tomorrow, there is still potential opportunity. So my trade was almost like, okay, let me take a trade. If it works out, great. If it doesn't work out, then do this, get out at break even. I'll go over what exactly happened. So my entry position, I shorted the 17,200 call and 16,400 put. Okay, so this for 25, this for 20, let's say. Market went up. These calls went up all the way till 32, thereabout. Yeah, so in the first three candles, market they went up to 32. So just to balance, I moved up my puts to 16,500, and even then my calls were trading at 32, and these puts were trading at some 24 or something of that. This thing. My position straight up went into a mark-to-market loss of around 3 points or so, and after that we had a reversal into which it was more or less trading at break even plus minus 2 points. Once we broke this swing here and we were testing 16,850 and we broke, I had no option but to get out. Here I had to exit because the trade was entered thinking that there has been a volatility crush. Maybe the market stays very calm and there's a continued fall off in premium through the day. But had this candle then started having follow through, this would have been very painful to sit through. Which is why idea is test the water, trade works out, great, doesn't work out, get out and look for opportunity when it comes. I'm not in a rush to trade. I haven't had an intraday trade on Monday, yesterday also, today also. So all 3 days I have not traded simply because, look, whatever crush has to happen in premiums is happening overnight. Why? Because all the risk is also overnight. It's like people who are shorting options and holding overnight, probably doing, hopefully doing in a sensible way, wherein they have not all their margin used, with risk defined kind of trades. Those are the guys who are taking risk. So those are the guys who are getting rewarded. Now the guys who are trying to trade intraday, initially itself, there's you'll end up losing money. There's no, see, nature of market some time back was there used to be a spike in the morning, a volatility spike in the morning, and then a fall off of that rest of the day. But right in the morning, if there's this huge volatility crush, then from there volatility is only going up, and premiums and spreads are only going up. In between, little bit of sit through some kind of pain, then maybe you can make money. That's how things are. So anyway, now back to the point. Point is that as long as I don't find it attractive to trade until the market starts to give better opportunities, or at least the realized, what if there is, for example, a big IV crush in the morning and then the realized volatility also is extremely low, I will not be taking much risk until such a period. So even if it means downtime, that is perfectly okay with me. And one more thing, yeah, this is also important. I hate round numbers like 17,000, 18,000, especially when, so let's look at it this way. Okay, see, this is the Russia-Ukraine saga. Till then, 16,800, 16,800, 16,800 always acted as a support. And bam, Russia-Ukraine saga starts. We have all these days trading below 16,800. Here we made a move above 16,800. So already many people's long situation would have triggered here. And around 17,000, just below that is where the 200-day moving average is right now. So once that is crossed, a lot of people's longs will get triggered. I don't like these numbers, because if you're trading non-directional and there is a move happening around that number, you'll see that as soon as you cross 17,000, the call options above 17,000 are going to go ballistic, right? Whereas the puts will not compensate for that. The puts will not lose enough. And if we keep dilly-dallying 17,000, above 17,000 for some time, below 17,000 for some time, that's the worst situation for trading non-directionally intraday, because every time you cross that number, suddenly everyone is going to be, okay, we're above 17,000 now, cover your shorts, and then you've gone below 17,000, okay, the puts gain value. That's how it is. I mean, I'm probably not doing the best job explaining it, but I don't like those numbers. So yeah, until something happens here and we get out of this okay, are we going to break 17k or not situation, not too interested. Even expiry trade tomorrow, I will maybe not even trade, or I will take some kind of trade for 5 points or something, keeping a stop loss of 2 points, and that will be the end of it. Until I find things more attractive, not going to take much risk. All right, that's one thing. Second thing, yeah, about that 17,000 itself. So there's a lot of 17,000 has been highest open interest, not today, yesterday, but for this entire series. 17,000 has been maximum open interest. If these guys panic, that, I mean, if and when these guys panic, that is when you'll see like big call side short covering. Generally, there has to be some kind of trigger for it. It's either you gap above it, or there will be some kind of trigger, and that will lead to an intraday move over. It's rare that you'll see just like, okay, we're just going up, and we just break out over 17,000 without any specific trigger being there. So regardless, I'm just rambling at this point. Thank you so much for watching. I hope you had a good trading day today, and I'll see you tomorrow. I'll see if I even bother taking a trade tomorrow or not. Lot will depend on what kind of premiums are available. If premiums are really bad, then expiry or not, I'll probably just take a back seat and I'll try to collect 4 or 5 points and be done with it. Thank you so much for watching. Take care. Have a good one. I'll catch you later.